Welcome back, investors, to Ticker Time News. I'm Adam, and given that competitor AMD had raised the bar earlier this month with its double-digit Q1 EPS beat and its bullish Q2 predictions, Nvidia's single-digit earnings upside for Q1 and downbeat Q2 revenue guidance didn't initially stir much enthusiasm. This could be due in part to Nvidia's relatively high multiple of 29 times forward earnings, a premium compared to AMD at 20 times. However, with AMD shares having tumbled over 40% on the year, its weak points from Q1 may have already been priced in. Furthermore, Nvidia would have exceeded analyst Q2 revenue expectations if not for factors outside of its control. Also, the company increased its share repurchase program to $15 billion through December 23, signaling that management views the stock as currently undervalued. The most glaring negative from Nvidia's earnings report was its bearish quarterly revenue guidance, which came in below expectations for the first time since Q4 of 2020. Nvidia expects Q2 sales of $7.94 to $8.26 billion, translating to just 24.5% growth year over year, and marking its slowest quarter of growth in over 2 years. The lockdowns in China are a culprit, as is lower demand in parts of Europe brought on by the war in Ukraine. Nvidia anticipates that those issues will deal a negative impact of about $500 million to Q2 revenues. Drilling a little deeper, the company anticipates lower sell-through in Russia and China, negatively affecting its Q2 gaming revenue of $400 million. Meanwhile, foregoing sales to Russia is expected to take a $100 million bite out of Q2 data center revenues too. So that totals up to $1 billion of lost revenue. However, one of Nvidia's primary suppliers, Samsung, cautioned in late April that overall mobile demand was cooling off from the crisis in Ukraine and China's lockdowns. And remember, back in late March, another supplier, Micron, noted that production at one of its China facilities took a hit from the lockdowns. So investors may have already suspected that Nvidia had a challenging quarter ahead of it. Nvidia also demonstrated its technological dominance in Q1, highlighted by its 47% adjusted EPS growth and 46% revenue growth year over year. Outside of automotive, Nvidia segments exhibited strong growth in the quarter, with data center and gaming continuing to set quarterly sales records. Data center revenues grew 83% year over year and 15% quarterly to $3.75 billion. Sales from hyperscale and cloud computing customers like Microsoft and Amazon more than doubled from last year. Nvidia also noted that its customer base is adding capacity to keep up with demand, boding well for continual data center growth going forward. Gaming revenues jumped 31% year over year and 6% quarterly to $3.62 billion, fueled by robust laptop gaming sales. Since AMD and Intel both commented that the PC market decelerated in Q1 from the near record shipments during the height of the pandemic, it was very encouraging to see Nvidia report strong laptop demand. Nvidia supplies graphic chips needed for gaming, helping to sustain its PC demand, as it caters to a totally different market than AMD and Intel, which provide chips for a much broader audience. Bottom line, after enduring a brief sell-off after earnings, roaring back as the smoke generated by its headline downbeat Q2 guidance clears. And lastly, as shares are still trading at half price from record highs set back in November of 21, and as management is looking to buy back over 3% of its outstanding shares within the next year and a half, Nvidia remains a solid choice for buy and hold investors. Do you think investors overreacted to earnings report? Let me know in the comments below, as your comments help us all to better understand. Do me a favor, click that like button, share this video, and join us in beating this crazy market by clicking the first link in the description. I'd love to see you there. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.